Hello, I'm Hickey from interest.co.nz and welcome to a special report on investing brought to you in association with ASB. I want to take a step back today and look at the wide scope of investing. Should we be investing in stocks or bonds or property or in the bank? And over what term should we invest? And when is the right time to invest in stocks, for example, or bonds, for example? Well, the accepted wisdom on all of this is that when you start saving in your 30s or so, you should invest in stocks a lot because over the long run, stocks outperform everything else. That's the accepted wisdom. But is that actually true? Certainly with the fall in the stock market in the last couple of years, particularly in the last 2 or 3 months, it's now clear that you would have been better off in 1969 investing in US Treasuries than you would have been investing in the stock market. And there have actually been periods of up to 30 years when it made no sense to invest in the stock market, which calls into question this idea that you're better off in the long run investing in the stock market, particularly when you start saving. Because right now there is a whole group of investors, baby boomers, let's call them, who started investing in the late 70s, early 80s, who are actually now worse off than if they'd simply put their money into the safest type of government debt. And now we should ask the question, are these baby boomers going to stop putting money into the stock market and start putting much more of their money into bonds? Well, actually that's more sensible anyway, particularly when you get close to retirement. You should be thinking about putting your money into a safer instrument, one that will provide you with a regular income once you're retired. But it also means there may be a new generation of investors who have seen so much wealth wiped out from the stock market that they stick to corporate bonds and government bonds. Now this has some interesting implications for the capital markets and companies and how they raise their money. They may be forced to raise much more of their money in the corporate bond markets, and we've certainly seen that in New Zealand in the last 3 or 4 months. But it does ask the question, will New Zealand, which actually fell out of love with the stock market in the mid-80s in 1987 after the crash then, will we ever get back into the stock market? There's another complication here in New Zealand too, in that many people got into the property market. And as that market dives away, it takes out another option for investors to get into. And so you have to think that corporate bonds and government bonds are going to be the most popular for investors for some time to come, after the biggest shock to the stock market since the 1930s. I'm Hickey. That was a special investing report brought to you in association with ASB.